right, well, welcome to another episode of Money in the Bank with Frank. Today we're going to talk a little bit about the Investment Advisors Act of 1940 and how it kind of is probably a pretty good template for what's coming in the pharmacy benefit management market, which is also unknown to most of us financial advisors as another ERISA plan that we should be consulting on as actual financial advisors. Before we get into that, let's go ahead and talk a little bit about the disclosures. So, one thing, why am I even talking about the Investment Advisors Act of 40 and why am I talking about pharmacy benefit management plans? And it's interesting how I got here. I have been working in this industry, in the financial services industry for going on 30-ish years. And while I've been managing 401ks, 403bs, retirement plans, defined benefit plans, defined contribution plans, and working with third-party administrators on setting up the right structures for these companies that are, really just getting started and need all the help they can get, it was to help provide a framework. And my biggest deficiency was not realizing that there was another ERISA plan out there that's being taken advantage of, and that's what I think a lot of people in Congress, as well as a lot of people on the payer side or, municipality, company, whatever side are realizing that they are paying for stuff that they may not need to. And even if they don't know, it's coming because sophisticated payers are pushing for reform. And before we go crazy and start spending all sorts of money and over-regulating and creating regulatory capture for incumbents, which is the exact opposite of what we really want to happen, I thought it might be helpful to talk about some legislation that actually happened and some legislation that actually works and wasn't born yesterday, right? Like generic drugs are generally good because they've got history and proof of efficacy. And we have something like that right now in the Investment Advisors Act of 1940, which was born out of necessity. It was an industry born of hope, and everyone wanted to make a little extra along the process when they were like setting up the plans and managing the plans and making sure all of the employees got what was theirs. And so these extra layers of fees were everywhere, which in the beginning wasn't a big deal when these plans were just getting started. But once they got started and they were really large and larger, they started hindering investment performance and overall retirement quality of life for the participants. And what happened was what happens in every industry. The government stepped in to clean up the process. And it happened again with ERISA in retirement plans in 2012. We've seen this over and over again. This absolutely intersects with the pharmacy benefit industry. And, as many of these plans are governed by ERISA, several factors converge to create the need for this legislation. Industry growth. The Act of 1940 addresses concerns about the ethical conduct of investment advisors. And this is a current concern mirrored in the pharmacy benefit plan industry today. This industry has seen significant growth and very limited oversight since 2006. And that was with the birth of the Medicare Advantage plans, or Medicare Part D for Care-K plans. So we have number two, a regulatory void, right? The act aimed to fill a regulatory void in the investment advisory field, which is similar to the need for clear regulations and oversight in the pharmacy benefit plan industry now. Number three, why was this act created? It was created by dislocation in the market. Just as the crashes of 1929 created the oversight, the pharmacy benefit plan industry changes has certain unique challenges as well, such as rising healthcare costs and drug costs. Why are drug costs inflating at 2 to 3 to 5% per year when 80% of the generics have been deflating since 2000? So there is clearly a need for effective cost management strategies. And This is something that was addressed in the Act of 1940. So the Act's key provisions are not only relevant to investment advisors, but also to those involved in the pharmacy benefit plans governed by ERISA. So this is for all of you financial advisors out there. You already have a jump and you have a lead in what you can do and what you should do. Secondarily, for all the employee benefit advisors out there that have not been through this, know that it's coming and you need to get ahead of the curve and start to act in a fiduciary capacity, or at least not to get in the way of the fiduciary capacity, because that will end you, that'll send you on your way to a new career. Now, remember fiduciary duty, which was a big part of the Investment Advisor Act. It introduced a concept of the principle that holds true for financial advisory firms. We have to do things that are in the best interest of plan participants. That aligns with the Act's objectives. And my opinion is that while this is happening in most financial advisory practices and firms for retirement plans, I do not believe that we are doing enough in the employee benefit space to act as a champion for the end user, for the client, for the employee who has hired you to be their fiduciary, to do the things that they are unfamiliar with. We need to do more. We need to do better. Full and fair disclosure. This is another part of the Act. Transparency is vital in both fields. Just as the Act mandated full and fair disclosures by advisors, these same issues are staggering in the pharmacy benefit space. And pharmacy benefit plans must provide clear information about to plan participants about their benefits, their cost, potential conflicts of interest. This is huge in this space. Large retirement plans currently require independent audits annually. Why isn't that the standard in the drug management world? In my opinion, we can do better, and we should do better. And there's technology out there right now that can do better. One of the big issues that we have, and that we'll see legislation very likely address, is that ERISA plans and in the financial services world they have oversight by several different agencies. We have the SEC handling investment advisors, and we have the Department of Labor, which is playing a critical role in pharmacy benefit plans under ERISA. The problem is the Department of Labor doesn't generally have teeth, and they do not have an effective way of policing these plans. Both agencies are compliant and there to protect the interest of investors and plan participants, but there is certainly a gap in the drug plan world, and I expect that will be coming to an end. Regulatory framework. This is what's coming. A consistent regulatory framework ensures fairness and protection, or it should. I don't know if that's going to happen. I don't know that we have a good history of that, but if we could police ourselves and work on this ourselves, maybe this would be a softer blow. The principle is equally essential for pharmacy benefit plans governed by ERISA. It should guarantee the participants a standard level of protection. Employees go to work for a company because they know that you have the rails to handle their benefits and to handle all the things incidental to them living a long and fruitful life after retirement. And I feel that that is missing in the world of pharmacy benefit plans. So, in closing, today, the Investment Advisors Act of 1940 continues to guide the practices of investment advisors, and simultaneously, ERISA, which governs all pharmacy benefit plans, it's supposed to ensure participants' rights are upheld in promoting responsible management of healthcare benefits. This is not happening effectively today. By understanding the history and the provisions of the IA of 40, as it's been effective in other ERISA plans, hopefully it'll also shape the industry in the pharmacy benefit industry, which should promote integrity, transparency, protection for payers and plan participants alike. Thank you. I know it was a short segment, but I thought it was really important to talk about. Have a great day.
Hey, thanks for watching The Merge. We've got a ton more stuff for you to watch on YouTube, on Instagram, on TikTok, everywhere. Check us out.